Hello and welcome everyone to the March Investment Outlook. Thank you once again for taking the time out of your busy schedule to join us today. To our friends dialing in from Europe and the Middle East, a very good morning and afternoon. And to those dialing in from Singapore and the Asia Pacific, very good afternoon and evening. So our theme for today, really, it's given that we are going into our lunch break and dinner break soon, we want to make it a bit more impactful, so to speak, right? So recipe for a catch-up rally, but where's the lunchtime crowd or the dinner time crowd for that matter? As always, I have the pleasure of introducing Katalin Tischhauser, Sygnum's Head of Investment Research, who will share with us her thoughts and perspectives on the key topics we'll be discussing today. But before we proceed, as always, a gentle reminder once again to our audience that all content and opinions presented in this live stream do not constitute investment advice. All right. And with the formalities out of the way, let's get into the thick of things, right? Well, it's been a tricky month, right? I'm sure you'll agree with me. And as always, right, there appears to be the scenario that, there is optimism, there are spades of good news in the market, but somehow do we need more? And then we want to talk about how crypto really no longer exists in a vacuum pack, right? Is it a case of a coming of age and adolescence, a maturity, and hence, being affected more by other various factors in the market? And then brings us nicely to the observation, however, that notwithstanding the turbulent and a bit more less directional markets that we've seen, there are individuals, there are entities who are adding a pinch of crypto to their portfolios, right? What is driving that kind of behavior? And lastly, of course, we want to talk about the Memecoins, Ethereum, Solana as a digestif, to see, and understand if there's a change in investor behavior that's causing a bit of that drag in behavior of these coins of late. All right. And with that context put in place, let's do our deep dive straight away. Topic one, a dash of good news, and is it enough or is it being ignored by the crypto market? Katalin, in your paper, you write about the crypto market and the community somehow shrugging off, evidence of good news in the markets. And perhaps could you share with us what good news you're referring to as you wrote your paper?
Yes, certainly. And I would go even further than calling it good news. I would say that crypto fundamentals have never looked so good. And when we look at the world's largest financial market, the US, the changing stance of the regulators, primarily the SEC, is hugely significant. And I think one of the biggest good news, as you mentioned, by now the SEC has dropped basically all the major lawsuits, appeals, and investigations against crypto businesses. Mm-hmm. They confirmed that Bitcoin mining, or any other mining is not the securities transactions. Receiving the mining reward is not covered by securities laws. They launched roundtables on refining various aspects of crypto regulation, and they're really proceeding very aggressively and diligently on what they promised, which is to give clear rules for the crypto industry and to have feasible paths for compliance. So this is going ahead, even though the new chair of the SEC has still not been confirmed. The preliminary chair is already proceeding with this agenda very fast. I would say much faster than I would have expected, or the market generally expected. And this is not discounted in the prices. The other major good news is, of course, the political support for crypto versus previously mostly having political headwinds. To have a supportive administration in place that's looking to encourage businesses and looking at ways also when the market was flagging, we immediately see a couple of social media messages from the president and sort of really looking at the industry and and trying to really give it the support that it needs so it can thrive. And then we have, of course, the Bitcoin reserves on the table, and now there was the executive order that moved the DOJ seized Bitcoin into reserves. And this is followed up by a bill that has been filed to make this executive order into law. Now we'll have to see what happens through the legislature, but certainly they're trying to enshrine it so the next president cannot simply strike this executive order. And also the administration signaled that the executive order didn't just move the seized Bitcoin, but it also allows for budget neutral ways of acquiring further Bitcoin. And I think that's maybe the most important. Just moving the seized Bitcoin is not a big deal, but that there is the possibility, and it is foreseen that the government would be also acquiring Bitcoin. And they actually signaled, Bo Hines did specifically, that they're actively exploring ways of how they can purchase Bitcoin in budget neutral ways. Then we also have institutional adoption, really proceeding. And here I would like to make the point that, the Bitcoin ETF inflows and outflows, I think, have confused people and definitely affected sentiment negatively. But when we look at the period of outflows and then the period of inflows, and we overlay it with futures trades of hedge funds, there is data on this, then we can kind of dissect whether it was market neutral transactions or whether it was actual institutional buying or institutional selling. And the evidence is that when we saw a lot of outflows, that was overwhelmingly closing market neutral arbitrage positions. So rather than institutions selling their Bitcoin holdings. And recently, when we have seen inflows, that was primarily outright buying rather than arbitrage trades put on. So actually the evidence, and then we had also the first sovereign wealth fund investing a very sizable amount in crypto. So this is definitely proceeding. And also there is good news on some of the use cases. I mean, here the picture is more patchy, but the use cases that have a lot of TradFi and political support, such as tokenization, stablecoins, they are having clear traction. Stablecoin market cap is at an all-time high. We have also seen in real terms the value locked in DeFi increasing actually very sharply. That's a lot of good news.
No, absolutely, Katalin, and thank you again for reminding us, right, the audience as well as myself, that it's always important to dig deeper than just look at the data points, right? I mean, your comment about the spot Bitcoin ETF flows, it's a good reminder. So if we were to accept and park that side of the equation, the positive news being available in the market, and then we're trying to understand what has been the lacking side of it. So, for instance, I mean, the question therefore is, what do you make of the current Jekyll and Hyde kind of behavior, kind of stance that people are exhibiting, the holding pattern that we've seen over the last few weeks? I think we've had a nice catch up over the last 1 to 2 days, and that's nice. Question really is, if there are indeed some silver linings, as you've shared, why have investors been lackluster in terms of adoption? So again, right, where is that lunchtime crowd?
Yeah. So in terms of the performance, obviously the last 2 months, the performance of the crypto market has been, rather poor and quite disappointing. Especially in the face of a reasonable amount of good news. And of course, there were some reasons for this. There was some disappointment that took the wind out of crypto's sail after the election-related euphoria. Certain things were a bit of a letdown. The initial executive order being slow and eventually not saying much. The crypto summit actually saying nothing new. Of course, very, very positive. Everything that was said was very positive, but there was nothing there that we already hadn't known. Also on the reserves, there has been some negative developments, because even though a lot of US states, more than half, advanced Bitcoin reserve bills, we started getting rejections, and there have been 5 rejections already, and even the state that did pass the Bitcoin, the Bitcoin Act that they filed, which was Utah, they actually took out the Bitcoin reserve provision. So the act passed, but all it says is that we encourage people to hold it, and they can have wallets and self-custody, and we really support it, and it's really great. So it's just kind of a neutered expression of general support, which is almost like a rejection of the Bitcoin reserves. Also, it included, of course, Wyoming, which is Cynthia Lummis's home state. She's the one who filed the Bitcoin Act that made it look like that's also not as likely to pass as maybe people thought before. So there were negative developments. I mean, of course, the Bybit hack didn't help, and also that the hackers were selling some of the very significant amount of crypto, and that selling was selling pressure and all of this. So there were some disappointments and some negative developments, but ultimately what we saw was that it affected sentiment, and then sentiment took on a life of its own. And actually sentiment ended up decoupling from fundamentals to an almost unprecedented extent. Actually, the crypto fear and greed index, which is kind of a measure of market sentiment, was lower recently than in the wake of FTX. And that's crazy. That's crazy. In the wake of FTX, the fundamentals were very poor. Institutions were walking away. The market just had a ton of scandals and scams and fraud, and regulators were very much cracking down, and in a not in a helpful way, not in a let's clean things up, but basically just preventing innovation and preventing business. The political headwinds were very real. It was crypto businesses were getting debanked. It was very hard to get going and to actually build anything in the crypto space. And these truly negative fundamentals justified a better sentiment or a less terrible sentiment than what we saw quite recently. And this gap between the actual fundamentals of political and regulatory support, move on reserves, institutional adoption, all of that going forward is glaring. And I think it really could just happen because the post-election euphoria disappointments just basically left the market without a narrative. They left the market kind of rudderless. And then the vacuum was filled by macro news. And basically, people need something to talk about and something to latch onto. And the crypto market latched onto macro news. And the environment for risk assets has been poor. And crypto just basically moved to exhibit a very, very high correlation with risk assets, but in a high beta manner. So kind of same direction, but going much, much further. And this is something that occasionally happens in the crypto market. But let's say a year ago, we saw a period when risk assets and crypto went in the exact opposite direction, pretty much, for an extended period. So it's not the nature of crypto to behave like this permanently, or the kind of the baseline for how we would expect it. But definitely in the last couple of months, the correlation with risk assets has been extremely high. But to come back to the point of sentiment and fundamentals decoupling, this can happen, but in the long run, it's always fundamentals that prevail.
Absolutely. So Katalin, that's a perfect segue for our next topic, right? Or there we move into our next section of the discussion, whereby let's talk about that point, right? Sentiment outweighing fundamentals, and crypto once upon a time was moving in opposite directions from the traditional asset classes, but now correlation appears to be picking up. So if you were to take crypto out of the vacuum pack, I mean, if I could use that figuratively, right? As if you're taking a piece of steak out of the vacuum pack after seasoning. Question really is, it's are we reminded again that it's as a virtue of the maturing sector, right, as it grows into as a adolescent stage of life, is it more exposed to non-idiosyncratic kind of exposures? Therefore, be it, as you were saying, right, macro factors affecting across the board, and therefore crypto as well being caught in that cycle, be it up or down per se. And perhaps on that note as well, Katalin, perhaps share with us your views on potentially what a recession or stagflation or even QT could bring, right, on the end.
Right. Yeah, no, it's it's interesting, and like you also mentioned, and crypto goes through periods when it's really dominated by idiosyncratic developments, and then when there's a vacuum there, like we had recently, then it becomes very tethered to macro. And there's also the question, which maybe we can come back to later, but what should it be? What actually does make sense for the asset class? But currently we have seen a very high correlation with macro. So it's a very legitimate question, what is going on with the global macro? There's a lot of nervousness for sure. And the nervousness is justified because there are some very major instabilities. The fact that governments are increasingly indebted, and both deficits and government debt are escalating without any end in sight. Pretty much, in most economies, certainly most Western economies, introduces a lot of instability. That a lot of the debt is not spent productively. That obviously undermines the economic fundamentals in the long run. The US debt ceiling debate is still not settled, and actually nowhere near to being settled. And I mean, I'm sure they will resolve it. I wouldn't expect the US government to default. There are ways to get around that, and I'm sure that that's the path the US will choose. But it very much seems like that either the debt ceiling will yet again be increased quite substantially. $4 trillion is what's being proposed. That's probably what's going to happen. But also Trump talked about doing away. He would like to see the debt ceiling completely removed. And basically what that tells me is that it's still going in the direction of growing deficit and growing indebtedness. This is despite all the narratives and about Doge and cost cutting and efficiencies. I think that basically the net is going to be growing deficit, and the actual financial impact of Doge is going to be relatively insignificant, because everybody's looking to more deficit and more borrowing actually, and not in the other direction. So there are all these fundamental reasons why it's right to be cautious and nervous. However, I actually see the macro backdrop as benign for financial assets currently.
Okay.
That would be my net conclusion. And my primary reason for this is that there is a high likelihood of continued liquidity injections in most of the major economies. And liquidity lifts financial assets unless there is a major meltdown, like a recession and so on. But basically reasonable okay growth and liquidity injections is almost an ideal scenario for financial assets. Whether in the long run that's how strong economies are built is another question, but it's definitely a benign to positive scenario for financial assets. And we see this liquidity injections are expected in Europe. In fact, they've been announced and foreseen. The ECB cut rates recently, and of course there's a lot of spending that's been announced in Europe, of course, to be spent primarily on defense, which is not productive spending. Nonetheless, it's stimulative in the short run. Germany's done away with its constitutional debt break, the ceiling, and there's basically more liquidity to be expected, certainly across the European economies. The same in China, where they're looking to stimulate domestic demand as international trade is under threat with tariffs. China is strongly seeking to boost the domestic economy. So it's the same direction there, and it looks the same direction in the US as well. Basically, after the last FOMC meeting, the signal that Powell gave was dovish.
Right.
He said, basically, I think the key thing was he said tariffs will have a one-off impact on inflation. Whether tariffs will have a one-off impact on inflation, I think is an open question, and they may well not. But that's not the point. The point is that what he is signaling is that inflation concerns will not be holding. Powell always speaks in riddles, right? So you try to, yes, of course, that's the job. So basically the signal was, I am not concerned about inflation. This is not going to stop me from, proceeding with future rate cuts. That's the key signal. And on top of that, they're tapering the QT, the quantitative tightening, starting next month. So that's going in that direction. And then if you look at, for example, of course, the Fed lowered the GDP forecast from 2.1 to 1.7%, raised the inflation forecast from 2.5 to 2.7%. However, that picture, that level of growth and that level of inflation is still a solid picture. It's directionally, it looks less positive than it did before they changed these numbers, but it's still a solid picture. And the data we had recently, I read it as almost an ideal combination. So, for example, we saw consumer sentiment plummeting now for the fourth consecutive month. It's like the lowest in 12 years. But at the same time, retail spending has been increasing recently. So it's a combination where consumer sentiment is often taken as a recessionary, leading indicator. And so that would prompt the Fed to be concerned and more likely to act, right? To stave off, a recession when there's an indicator that's pointing in that direction. But at the same time, retail spending shows that the activity is still okay. It's still there, it's still okay. So I think this is, at the very least, to what extent crypto should be tethered to this is another question, but I think the macro picture is benign.
Lovely. Thanks so much, Katalin. I mean, you've answered the question. I wanted to ask you about how tariffs come into play with crypto. I think you've answered that, so that's very good.
I just maybe it's worth highlighting that tariffs directly have nothing to do with crypto. So I mean, just to make that point. So it only affects crypto indirectly because it affects the macro picture, and when the correlation is high, then through that backdoor, it would have an effect. But even on tariffs, I think the problem, like the tariffs could work out very well for the US. Generally, tariff wars are won by countries that are self-sufficient, and which the US is. And protectionist policies, therefore, can be actually very positive for the US economy in the long run. But of course, it depends on the full set of policies. It works well if you invest in infrastructure, if you invest in education, and a single policy alone, it's like saying some cars will drive on the left side and some cars will drive on the right side. So it's really a policy package. So but potentially a self-sufficient country like the US can actually benefit. The US economy can benefit in the medium to long term from reshoring businesses and having these protectionist policies. And I think the market, of course, it affects some industries negatively and others positively, and it's a mixed picture, but I think probably a net positive. But I think what bothers the markets is the uncertainty, is the chaos, is that Trump announces one thing and then backs off and then goes harder and then goes softer. And I think businesses cannot plan with chaos. So it's less that the US is proceeding towards protectionist policies and this is a problem for the market. I think this is not really the concern. Primarily, the concern is the current uncertainty and chaos and the lack of ability to plan, which is affecting businesses. And crypto, it shouldn't affect directly, but it affects kind of through this current high correlation indirectly, basically.
Good stuff. Thanks, Katalin. Okay, so let's close off this segment with perhaps one last macro-oriented question. And I mean, it's been a talk of the town, right? I mean, you over the past few weeks, especially. Do you see crypto being a risk-on asset or a hedge asset? I mean, this has been asked many times, right? So what is our take? What is your take?
Yeah, first of all, what do we mean by crypto? Because I think Bitcoin and the rest of the crypto market are very different in this regard. Okay. Bitcoin has very strong store of value characteristics. The rest of the crypto market is basically a tech play. Its applications, its use cases, and the platforms they build on, which is a new type of technology that you can build all sorts of things on. And I think it makes sense to look at the rest of the crypto market as basically a new version of the Nasdaq. But this isn't really fundamentally true for Bitcoin. Applications are not really building on Bitcoin, a little bit, but it's a rounding error. And Bitcoin genuinely has good store of value characteristics. So the question is just, is it accepted as a store of value or not, right? Because, if it could be, but it's not, then then it doesn't matter that it could be, right? Like, to me, it does not make any sense to look at Bitcoin as a risk asset. Okay. However, if it isn't actually adopted as a store of value, within the crypto market, it is a store of value. Bitcoin is all about hodling. No one ever sells. This is the crypto investors. But outside the crypto market, if it's not meaningfully embraced, like it's now being proposed, and there are moves as a strategic reserve, as a central bank reserve, or a treasury asset, and that sort of a thing, whether that happens or not will ultimately, I think, decide, how Bitcoin should trade. And I actually find it quite unhelpful. For example, when the crypto industry itself calls Bitcoin a high beta tech play, and there was which I think it fundamentally is not, but it also it even undermines the possibility of Bitcoin reserves, right? Because it's for a central bank to buy a high beta tech play as a reserve alongside gold makes no sense at all. So when the industry pushes sort of this line, I think it's quite unhelpful. And we saw, like, recently, Standard Chartered came out with this, that in the Magnificent Seven, Tesla should be replaced by Bitcoin, right? And yes. So, I mean, I don't like seeing this. I think it doesn't correspond to Bitcoin's actual fundamentals, and it makes it less likely that those fundamentals become reality.
Okay. Thank you, Katalin. Great. So on that note, I think we're well positioned to perhaps go on to the third segment of our discussion today. And really, it's a bit more high level, I would say, but I think it's good observing. So, for instance, over the last few weeks, or even for the month, for that matter, we've seen February wasn't very kind. March has been a bit, sideways trending. Notwithstanding these observations and these behaviors, you do see institutional level, sovereign level kind of investors who have decided to take the time, or rather the opportunity, to add to the crypto exposure, for that matter, even take the first step into crypto. Any thoughts on what you see as what could be driving that behavior? I mean, of course, in the US, we know that that the executive order is being written for an SPR, strategic Bitcoin reserve. Abu Dhabi as well, right? The Sovereign Wealth Fund, Mudabala, has also added, the 7th largest holder of the BlackRock Bitcoin ETF. But that balances off with some more, a couple of more other sovereign wealth or institutions that you've mentioned in the start, right, that have decided to hang on, put a hold, and let's say, let's keep a watch until, other things peter out or get better. Yeah. Any thoughts on whether, the time is ripe, or whether it's necessary to think about such things yet?
Yeah, I think the institutional adoption is proceeding. Is proceeding. We have news about it sometimes that grab the headlines. Some of it happens behind the scenes, and we don't hear about it in the headlines, or maybe just do after a certain time lag, that something happened 3 to 4 months ago that the first pension fund moved or the first sovereign wealth, and so on and so forth. But that is proceeding, and it's kind of institutional investment is more looking at crypto as an asset class, and making strategic allocations, which then can be tactically underweight, overweight, but making the decision that it has a place in portfolios. And I see no U-turn or slowdown in that process. Institutions just have their own timeline of how they approve and then build out the capability and then make their moves. And in terms of the Bitcoin strategic reserves, that's definitely the outlook has definitely been hurt on that recently. And I think the fact that Bitcoin had a strongly negative correlation with gold in the last couple of months, as there was uncertainty, and then gold has really proven to be the safe haven, and Bitcoin behaved in the exact opposite way. That obviously hurt the let's say the pitch to central banks and state governments, and we have seen these rejections at the state level as a consequence, and also these kinds of narratives that like Standard Chartered, it's Bitcoin is basically Tesla or that sort of a thing. So on the reserves, I think the outlook has become more negative. However, the U.S. government and specifically the Trump administration is really moving on this, and they would like to see this go forward, that's clear, and they're doing what they can. And if they will actually start buying, as the executive order allows them to do, as long as it's budget neutral, if the U.S. government starts buying Bitcoin, the fact that they seize the DOJ assets, it's no big deal. But if they start buying, that will turn sentiment on this.
Wonderful, great. Thanks for the optimism, Katalin. Okay, I think we've right about hitting into lunchtime now, so let's begin to wrap this up. Maybe just one last question, or maybe last one to two merged together, right? So, as with all things, right, as we come to the end of this segment, or rather this session, what can we have for dessert or a digestive? Let's talk about Memecoins, Solana, and Ethereum, right? Katalin, share with us your break down the story for us, right? What's actually been going on? You look at Solana that turned fifth year of its existence last week, 16th March. And then, of course, Ethereum hasn't exactly been seeing a lot of flows. In fact, actually, 13 straight days of outflows, at the end of or in the middle of last week. So, is there something going on? Is there an inflection point? Are investors beginning to ask deeper questions and simply just following the trend per se?
Yeah, the sentiment has been poor on both Ether and Solana recently. But on Ether for a long time, and Solana for a relatively shorter time, like the last 2 months. They suffered for very different reasons. On Ethereum, basically has been losing its competitive edge, and that's how it has been seen. And also, its scaling strategy siphoned the revenues off to the layer 2. So basically, even if the ecosystem thrives, which it may well, the value of Ether is obviously negatively impacted by the fact that the revenues go somewhere else. And eventually, there was a reversal in this, a brief reversal on Ethereum sentiment, when the Ethereum community got together, and they had a real crisis mentality and strategic refocus, revamping the foundation, addressing various competitive issues, or vowing to address them that have been, holding back either the ecosystem or Ethereum specifically, or the value of Ether. Vowed to speed up upgrades. That was always one major criticism, that they do everything very perfectly, but very slowly, and it's too slow. Everybody else is so much faster. They have to speed up. So when these crisis talks happened and these announcements were made, there was a brief reversal in sentiment. But then the current upgrade that's impending to be rolled out was postponed again. There were bugs on both testnets, and then they postponed. They tried not to postpone it, but they eventually felt it was best to do that, which then really killed that brief reversal in sentiment. So I think Ethereum is still there. Something needs to shift fundamentally for sentiment on Ethereum to turn. It's not turned yet. They still have the largest market share. They still have all the advantages. Institutions may still, most likely adopt. Traditional financial institutions still may well go to Ethereum as the safest, most secure, most battle-tested platform, which would then obviously be extremely value accretive. But we are yet to see that trigger where sentiment on Ethereum changes. And like I said, this last the Petra upgrade, how that's proceeding, that obviously has been another sort of pain point. And in terms of Solana, I mean, the burst of the meme coin bubble, of course, hurt Solana tremendously, because the last leg of their rally, initially there was a recovery and a lot of positive trends on only possible on Solana and a lot of build, but then the last leg of the Solana rally was really predicated on the tremendous transaction volume growth and revenue growth, but that was almost entirely from meme coins, which was always very vulnerable and risky. And when the meme coin hype ended and burst, Solana revenues got crushed. Actually, Solana revenues were at around the end of January, $45 million a week. Currently, they're $800,000 a week.
Wow.
That absolutely crushed. So this is obviously affecting Solana negatively. They have to see how they're actually building an ecosystem that's not predicated on the meme coin casino, right? Of course, the Solana CME futures went live, started trading. Yep. That's good. That makes it more institutionally appealing. Also increases the visibility and name recognition of Solana. So, we'll have to see, where they go from here. And as far as I think the broader alt market is concerned, actually, alts generally are the main beneficiaries of the regulatory changes. It's not Bitcoin, right? Like all the SEC clarification, what the status of crypto assets, removing the impediments from innovation, easy path to compliance, or feasible path to compliance, let's say, and all of that. That's not really a Bitcoin story. That's a rest of the market story. That's an alt story. It's not in the price of alts, and which is an opportunity. But again, I think that a trigger is needed. Sentiment on alts is very poor. And the way I read it is the market got quite jaded due to the lack of actual user traction. In the past, like in the previous cycle, the market was quite happy to assume a lot of future growth without a lot of evidence, and to drive a hype cycle for several years on the expectation of various use cases, metaverse and gaming and this and that, without a lot of evidence of traction, and the market's not prepared to do that anymore. It was the same in the previous cycle. The hype drove the prices very, very far for alts without evidence. And now I think the market's not ready to do that. And we saw that, for example, when the AI agents story got going, which is a genuine use case, and it can be actually a productive use case, but it was very early stage, and there was a very, very brief hype cycle, and very quickly the market was asking the question, actually, where's the actual business case? Where's the actual utility? Is this actually doing anything? Is this actually productive? And the fact that cycle was just lasted 6 weeks or something like that, shows that the market's really focused now on, show us the actual user traction before we're ready to go for it. So we're waiting for a catalyst, but I would say the regulatory changes are creating the right environment for alts. So hopefully the right environment will breed the right developments which will provide the catalyst.
Wonderful. Thanks so much, Katalin. I mean, truly many perspectives for us to, as we step into our lunch break, and for myself at least dinner as well. So good to think about. So thank you for providing us with perspectives and you know, the multi-pronged factors, so to speak, you know, when thinking about, you know, what could be the next step forward when we think about crypto. And thank you everyone as well for joining us today in this very interesting session. Especially given what's going on in the market. So thanks, Katalin, for the calming effect as well. To our audience and for the listeners dialing in today for a deep dive into the topics discussed today, as well as other papers that we have written on the crypto markets, please do enter the Sygnum.com website. Go on to our research and education section. You'll find all our library of our material and information and pieces of paper and thought pieces all available for your downloading and, of course, familiarizing with. Yeah. On that end, please also join our community on LinkedIn. Sygnum, just search for us and hook up, and then you can get all the information on our launches, our news, research, as well as investment solutions that are available. So thank you again, everyone. To our friends once again in the Asia Pacific, a very good evening and good night. To our friends in Europe and the Middle East, a very good afternoon. This is Sygnum.